Okay, hello everybody. Frank Dippold here from Velocity of Money, and I have my good buddy Jason Levy from United Mortgage on the podcast. Jason, what is up, brother?
How you doing, brother? So great to see you. So great to hear from you. It's always been fun dealing with your team and spreading the good word, getting market share in the marketplace with esteemed professionals such as Super Frank and the crew.
Thank you. Yeah, so we're being sponsored here by United Mortgage on this podcast, and you know, Jason and I hit it off from day one when we met because you know, uh, we have the same sort of psychology, and that's we're measuring the stats, and you showed me some stats that I loved, which shows exactly how many millennials there are, how many of them are buying, what the trends are. We have to look at those trends. And I met a guy, I don't know if you ever met this guy years ago, Jason, named Jeff Otto. He does the auto reports. And he was in New Jersey. He's still in New Jersey. And he was doing a lot of like Coldwell Banker training, Remax trainings, and he was training on the trends. And he talked about this was 2008. I literally had him speak. He talked about at that time, a lot of the first time home buyers or the younger crowd was moving to the cities, Jersey City, Hoboken, Brooklyn, Bronx.
Yep.
And the trend was that they would stay in the cities longer, they would rent longer. And it used to be that a guy like me or you would buy a house, we would get married, buy a house in the suburbs, and then paint our kid's first bedroom. We already had the house with the white picket fence.
Sure.
But the millennials stayed in Hoboken and Jersey City not only until after they had kids, but if you look at Hoboken, for example, they would have kids. They would put kids in private preschool, private kindergarten, and not move out until these kids were in sixth grade.
Yeah.
What did that do? That slowed down the purchases in the suburbs, but blew them up in the cities. Were you guys at United really seeing the same thing in like Brooklyn, Queens, and the Bronx as we were seeing on the Jersey side?
Absolutely. And it's really interesting to watch how the industry has changed and adapted over time. And it's also very interesting to watch certain professionals have the ability to reinvent themselves and become relevant even when times change and products evolve based on what's happening in the market, right? So there could be so many things that can affect the viability of financing, like market liquidity, investor appetite, um, the erratic nature of the bond, and trying to understand how to be able to predict behavior going forward. So we have the benefit here at United that we have over 3 decades of experience, and we have a huge body of work to look backwards on to be able to create some predictive behavior and model ourselves accordingly to keep ourselves competitive, nimble, and while still being able to offer a boutique type of approach, and take the worrying out of the emotional aspect of a borrower either trying to get into a home or trying to refinance property.
Yeah. So, at my seminars, and sometimes there's podcasts, sometimes there's Zooms, and sometimes they're live. We're going to resume live seminars in the fall again, unless things change again, which we're praying that it doesn't,
Mm-hmm.
from a COVID perspective. But, you know, I sometimes say to first time homebuyers, guys, do you realize you could buy a three-family house, live in one of the units for a year or more, put 3.5% down, borrow five, six, seven, $800,000 if you qualify, then have your tenants paying your mortgage for you, and get that mortgage paid off in 15 to 20 years, and have an 800 to $1 million asset that you own free and clear, that you came out of pocket $22,000 for? Would you buy? Would you buy something with 22,000 if I guaranteed you a return of $1 million in 20 years? Like, you got to be a total idiot not to.
Sure.
And yet, when we talk to first-time home buyers, sometimes they get that, and then other times, I'm sure you guys see at United, like they don't really get it. Like so the government, in some form or fashion, I have a problem with the way they do certain things. and this is not a political conversation, please.
Sure.
But if you look at Fannie, Freddie, FHA, which, correct me if I'm wrong, United Mortgages, you guys are direct with all three, right?
Yes, we are we are a three-headed dragon. So we sell directly to Fannie, Freddie. We have our Ginnie. We have a triple agency rating, and we are in the position to be extremely competitive and nimble at the same time because we have those types of offerings.
And that's just so you know, guys. I mean, I've been in this space for 20 years now. It's very rare that a company has all three. People usually start out with Fannie, then they go to Freddie, and I know United has a great relationship with Freddie.
Yep.
And then, and then Ginnie's the hard one, right? Because the liquidity needs to be there, and there's all sorts of things with servicing that makes it you have to have much deeper pockets in order to service properly. So that's impressive. And when you guys see the first-time home buyers that really get it, that understand the value of the FHA loan, the multifamily acquisition, and then, I always say, use the bank's money to buy the property, use the tenant's money to pay off the property.
Yeah.
And it's not no money down like Carlton Sheets was saying 30 years ago.
Right.
But 3.5% is pretty good. And if they can do that and then manage it properly with our system, it works, right?
It works. It works extremely well. And I want to comment on that. So 10, 15, 20 years ago, companies did not have to worry about having a digital overseer, so to speak, like the big eye in the sky watching everyone's efficiency rates. This didn't happen. They didn't have podcasts. We didn't have, I remember when we had dial-up AOL in the 90s. I mean, I could still hear the ringing in my ears. It's hilarious. But what's my point? My point is that a lot of platforms were able to get away with subpar type of service because there wasn't that digital threat to really push out the companies that were providing the right service versus the companies that were just making the transactions very black and blue in the process, right? So we know that we're only as good as our last deal, and we know that we're only as good as our last customer's experience. And in the digital age that we're in now, it's it's much harder to succeed and it's much easier to fail. And you're really measured by every single touch. So your concept, the fact that you build a fantastic audience and you're educating consumers that you could reach the masses by leveraging technology at a relatively reasonable expense, so to speak, that you're able to touch so many people and create so much awareness, offer free information, establish those kind of relationships. I mean, you can't even put a value to that. Those things can really, really last for life. And that's why I like to surround myself with winners. And you're at the top of my list.
Oh, thank you. That's kind of you. I hope my wife and children always say that I'm a winner because actually my kids tell me I'm a terrible father. I'm just kidding. So yes, the millennials want a digital experience, right? We've talked about this. And my spin on that is while they want a digital experience, the value is that we speak to them and educate them. And when I train my realtors, I say the same thing. Guys, listen, we're a commodity. Loan officers are a commodity. Realtors are a commodity. But by educating the consumer, by having that conversation, how to get the best rate, when are closing costs included, how can you include them? Why a lot of people still think it's either 3.5% down FHA or 20% down conventional.
Sure.
They don't realize you could do 3%, 5% conventional. They don't realize that you could buy out the mortgage insurance. They don't realize this is the one that gets them all the time. You realize the interest rate's actually better with 15% down versus 20. Why? Because the loan's insured. And if the loan's insured, then the bond market pays up for that loan.
That's right.
It better. Nobody gets that stuff. And I love the whole fintech model. I think you guys are moving towards them. And the mortgage companies that are at the top of their game are doing. And then if we spend time with that millennial saying, thank you for the upload, thank you for the digital interaction, but let me just make sure I talk to you like a human being, which I feel some of the huge ones are missing. Like you can go to, I'm not going to name any names, and fill everything out online, but you get treated like a number.
Yeah.
The key, and I know you guys do it, is treating people like friends or family, like you would treat your mother, your brother, or your sister.
Absolutely. Real estate transactions from a refinance or a purchase transaction, it's an emotional experience for those that are not in the actual business, right? And we have the luxury of telling our clients, leave the worrying at the door. Let us do the worrying for you. That's our job. And if you're going to continue to worry and not really be sure if we're going to be able to deliver, then we didn't do a good enough job in the customer engagement process up front. We'd have to relearn what we're doing wrong, debrief our sales force, and make sure that people can connect in the beginning to establish the right relationship, to allow them, the customer, to have the confidence to allow us to do the worrying for them. So that's at the customer point experience. Number two, from a real estate broker perspective, we have a plethora of thousands of realtors that refer business to us, and the way we give back is by educating realtors on products they normally would not be aware of. I did a seminar last week with a large firm, and I made a comment, and I asked the people at the seminar, I asked them, are you aware that there are 15 million self-employed workers in the market? And there are certain niches, though, that those self-employed workers, there are certain niches and certain demands that are not met, which is a certain section of the ocean that certain lenders are not even, they don't even have their boats there. And it's a market that's underserved, right? So if you could tell an agency that has 700 or 800 brokers that there's a section of the ocean that they should be marketing to, and then teach them whether or not we have the boutique exotic products to be able to get those types of self-employed borrowers into the home purchasing experience, it's really a win-win for everyone. We're teaching the brokers, we're giving value add, and then we have the option to potentially offer the financing for some of the customers that they refer. They can't refer everyone, but
Right.
whether or not we're refer it into the mix is really all that we ask for. So this is kind of the way that we nurture our investor broker referral network, by constantly keeping them relevant and making them understand the cutting edge approaches that could help them gain new market share.
Yeah, that's amazing. And there's a lot of people watching this. We got a Zoom going on. We got this really cool technology called StreamYard. So this is considered one virtual sort of live seminars.
Yeah.
And I always say this at my seminars. There's three types of people in the room. But actually, I want to address the fourth person that I don't really address very often. But the three groups of people are first-time home buyers. That's group one. People who already own a single family or a condo. That's group two. And then there's people who consider themselves real estate investors, which is group three.
Sure.
Now, what I would consider group four might be the baby boomers right now, who are eligible for reverse mortgages. And I know that you have a ton of reverse mortgage experience, right? You had your own company, a very successful company. So why don't we touch on, because I believe that reverse mortgages are very misunderstood, very misrepresented, and are a huge need in society, and no better person to ask than yourself, who's an expert on the product.
I appreciate you saying that. You're always very kind to me. The reverse product is a needs-based product, right? And I compare, it's either needs or wants, right? So a regular, straightforward borrower who calls up and says, I want to put an addition to my house. I want to be able to pull some cash out for my children's 529 or investment for their master's or law school or medical school, things like that. That's a want-based game. The reverse concept is really, really a needs-based game. And the product is designed to allow seniors to age in place. So what does that mean? So when a senior bought their home, let's say 25 years ago, and they took out a 30-year mortgage, the payment that they got on that mortgage 25 years ago is the same payment that they have today while the mortgage is being amortized down. The payment doesn't go down while the principal goes down. So theoretically, that consumer, that senior, borrowed the money at the height of their earning career. And then, 25 years later, when they're retired, they're probably at the lowest end of their earning career. So some of them have some cash flow constraints, and they need the ability to get some payment relief. Now, one of the biggest emotional hurdles that these seniors go through is wrestling with the thought of having to leave their home. the home that they raised their kids in, the home that they spoiled their grandkids in. They're afraid that they would have to leave because they don't think that they have the cash flow to sustain the taxes, the insurance, the upkeep. And the beauty of the reverse product is it gives the senior the ability to stay in that property by leveraging the asset that they have during the time of their life that they need it the most.
Yep.
So it's a fantastic product that does not have payment requirements. It gives seniors cash relief, allows them to age in place. Now, to add a further piece to that, which is very lucrative in the purchase money mortgage business, is the reverse mortgage purchase product does not get the type of press that it deserves. And the reason that a lot of people don't hear about it is because a lot of the professionals out there are not even aware of how it works. And people tend to shy away from things they don't understand. They either don't want to answer questions incorrectly, or they have a referral source that they don't want to misrepresent and, God forbid, burn that bridge. So they tend to stay away from topics they don't feel comfortable speaking about. So the interesting thing is a senior can sell a home, buy another home as a primary residence, and utilize the same qualifying guidelines to borrow money to leverage and not have to have payments while they're living in that home, right? So it's such a fantastic tool that a lot of companies are not aware of. A lot of realtors don't even offer it in their arsenal. And one of the things that I mentioned to a lot of our realtor partners is you should be targeting a 55 and over crowd and try to at least make them aware that they don't have to shoehorn themselves in to expensive debt. They could go into the same type of property they dream of without having to worry about affordability. And it's extremely important to do that. Now, back in the day when we first came out with the product, there was so much misinformation out there that instead of doing commercials or radio ads telling people apply now, call now for a free quote, we utilized an educational approach where we provided a 14 to 17 minute video that just talked about the marketplace, talked about how boomers are turning 62 at a rate of 10,000 people per day, and how they could benefit from a product that allows them to age in place. And I'm very proud of the fact that, when 8 out of 10 seniors, when they were surveyed, were familiar with our company and were familiar with the product, which means that the national play that we created was educating a huge amount of people. And I'd like to take a little bit of credit saying that kind of pioneered that product into the mainstream concept.
Yeah, that's incredible. That's incredible. I mean, listen, some people tell me that I'm doing a great job marketing Velocity Money, and I think I'm doing a terrible job. So I would love your advice on how you got it to a national scale, because we have a pretty good New York, New Jersey, and Florida presence with Velocity Money. But I know my goal is to help 10,000 people retire using real estate.
Yeah.
And my thing is, it's 3 properties. It's, if you're a first-time home buyer, it's how do you buy a property with a low down payment loan and sort of repeat the performance 2 or 3 times. Then if I start with a 27-year-old, by the time you're 30, 31, you're set. Because I'm going to show you how in 15 to 20 years, you're going to allow your tenants to pay off your mortgage for you. And who wouldn't want to retire with 12 to 15,000 a month in cash flow and $2 million worth of real estate owned outright? Who wouldn't want that?
Absolutely. Listen, your concept is fundamentally very sound. If I try to poke holes in it, it would take me, I don't know, maybe 5 years to try to figure out, find some flaws. The flaws are just not there, right? I think the concept is absolutely fantastic. It not only allows buyers or families in the U.S. to get themselves into their dream home, but it also gives them the ability to build a real estate portfolio and long-term be able to establish their nest eggs without having to worry about having enough income in their golden years. So you're setting them up for success in a way that is stable, fundamentally sound, and it's a long-term play. It's not a quick fix.
Yep.
Am I saying that correct?
100%. It's not a quick fix, and there's no such thing, right? And I look at all these YouTubers and all these people on social media, and there's a lot of clowns out there that are just selling nonsense. And I'm like, well, look, it's mechanically sound that if you follow the structure, you can't lose. Why? Because the key is the buy, right? So everyone's like, I'm looking for a real estate deal. What does that mean? Everybody thinks in real estate, usually the first two things they think about is appreciation and flipping.
Yep.
And those are speculative. Those are, you better be in the construction business if you're going to flip, right? The days of buying wholesale, the days of buying a sheriff sale, it's like going from little league to the big leagues. Like I talk to guys and girls that are like, yeah, I'm going to flip, but I think I can make $100, $100,000 per property. And I'm like, there's a lot to it. It's all about the buy. But with our system, when you analyze the property based on cash flow, you simply don't buy it if it doesn't have the cash flow, right? So if it makes a certain percentage on your money, you can't lose, right? Then things like appreciation, depreciation, other factors, those are bonuses.
Sure.
Cash flow is the main premise. That's all that matters. People just don't know how to do the proper analysis.
I'm curious to know when someone follows your program, are they able to interact with you once the program is completed? Like, do they get a chance to actually utilize you as a resource and reach you directly?
Yeah, it's great. That's a great question. I love that question. Actually, there's a couple things. We certainly do loans, right? And I've given United Mortgage lots of loans over the years. We have a great working relationship.
Absolutely.
We had a great branch with you guys at one point.
Yep.
I love Mark and Ira and what you guys are doing. And so we have a mortgage division. We also have a coaching division. The coaching division charges for group coaching and for one-on-one coaching. We're also coming out with a video series, which is going to be the least expensive, but I believe the Zooms and the live coaching are better. What happens is all of my coaching students also get assigned to a transaction coordinator, do a personal analysis of their finances, and we give them a customized action plan for their future. So, yeah, it's one thing, like, what do people retain? Like 80% of the information you teach them?
Right.
In our coaching classes, not only do we teach them and mentor them, but they get a copy of the Zoom recording, and then they get a customized plan with the transaction coordinator, because that's really what it is learning how to analyze property and then understanding personally where you're at. Because I'm sure you've heard from people, well, I don't have good credit. And I'm like, well, that's temporary. What's permanent is if you have good habits of spending and paying your bills or bad habits. But if you change those habits, we can help you get your credit up. Same thing with real estate. Like, some people are much closer than they think. Like, I take the group 2 people, the guy or girl that works at New York Life who has $300,000 in their 401k and $200,000 in equity in their home, and they're 44 years old, and they're like, well, I don't have any money. I'm like, no, you have money. You just don't have any money in savings because you didn't create the right liquidity for yourself.
Right.
Now, if I could show you how to take $100,000 out of your house and buy 2 vacation rentals, and bring in, the $100,000 you borrow might cost you $4,000 or $5,000 a year. But if I have the right formula that shows you that the vacation rentals bring in $20,000 profit per year each, wouldn't you borrow from A to buy B and C? You're not going further in debt. You're reallocating your assets and you're creating a bigger portfolio for yourself.
Sure.
So my biggest problem, and why I'm passionate about this, is first, it's helping change the psychology of America to see that mortgages used wisely is good debt. Credit card debt is bad debt.
Yes.
Right? So we can use mortgage debt to create. There's a guy that we know that was president, right?
Yeah.
Knew how to use the leverage of the bank's money. And yeah, they started with money, but he also knew how to get 10x on the value of the real estate by borrowing more. And that's the name of the game. And that's what you and I do every day for people.
Agreed. And I will say that if you're not in it, right, a shot not taken is a shot never made, right? So you have to be in the game to benefit from the game. And the beauty of what you offer is you give everyone an equal chance. In other words, correct me if I'm wrong, but you're not sizing up one consumer being more cerebral than another. That's not how your product works. The only thing that you want to attract is somebody who's motivated to be
Correct.
in the game. So the first step is they just need to want to play and they need to reach out to you. So those that even take that first step, that's a clear indication that they're serious about being a potential player. And you could bring them in and take them from a newbie to someone who has never played baseball before, put them through enough batting practice, coach them, and all of a sudden they're playing on a major league team. That's kind of the concept, and I really commend you on that.
Yeah, it is, and it's fun because listen, we do okay doing mortgages, and I earn a decent living, but when I got in the mortgage business in 2001, and I was blessed with buying and selling the company early in my 20s, and I had a few dollars in the bank. So when I looked at the applications, I was like, man, America's broke. Like, where's everybody's money? And I have a heart for helping people, because if you look at the cycle of get married or get a job, put money in a 401k, get married, put money in a 529, middle class, upper middle class in this area. I mean, people in this area make good money, but the system's not set up for them to win. But where the government really helped us, the hidden secret is the low down payment loans with Fannie, Freddie, FHA. There's such a huge advantage that we have because of housing in America. Do you ever watch any of these like Bahamas shows when it's like the middle of January and you're like, man, I got to buy something in the Bahamas. And you're like, oh, the condo's 380 grand. That's
Right.
like I'm buying a condo in the Bahamas. The problem is, do you know what the down payment needed in the Bahamas is?
No.
50%.
Ah, interesting.
So that takes out a lot of people.
Of course.
Because if you're buying something for 400, a lot of people don't have 200.
Sure.
But yet that same house in Florida, you and I both know you could do a 10% down second home.
Absolutely.
So now you buy something for 400 in Florida and you're out of pocket 40 grand plus closing costs. It's a lot better.
Sure.
I mean, Bahamas is a little nicer, but hey, Florida's not so bad either.
Not so bad at all. Not so bad at all. I think it's fantastic. How long have you been offering this particular product? How long have you been in the market with this concept?
We started doing seminars in 2017, and then it was for the purposes of doing loans, and there was free information, and I would hope to get their mortgages. But people were telling me, like, you are giving way too much information. A, because people can't digest it all. It's like drinking from a fire hose.
Yeah.
But B, like, they could just leave and go somewhere else. And so then years later, and we did a lot of pre-approvals. We had a lot of people looking for multis, a lot of people looking for singles, and we did a lot of loans over the last couple of years. But then there's a lot of people I meet a couple of years later who we circle back around and market to from Velocity Money, like, thank you, I bought 3 properties. And I'm like, I don't think I did a loan for you. So early on, I did a bad job of, getting my arms around my seminar clientele, which is okay. We helped people.
Sure.
But then this year, we started the paid coaching program because I realized that when people have a little skin in the game and they're really focused on it, then they're going to concentrate a little more. And it's not just a half-hour conversation about a pre-approval. And for realtors, I teach the realtors, look, you're flipping the script and changing the conversation. If I train you how to take somebody who wants to buy a single-family house in the suburbs, great, we all want that. But you get their mind going about maybe buying a few of them and how that's going to set them up for retirement, you're going to change lives. And more important for realtors is then you might have a client that buys 3 properties or 4 versus 1 from you. And then once again, you have value because you're educating them on something other than, hey, let me drive you to see your house.
Sure.
Like anybody could do that. I could have a Honda robot drive somebody to see a house, but it's the education piece that I think makes a difference in all of our businesses.
I agree, especially in the industry that we're in. It is a high stakes game, and these are emotionally driven transactions.
Yep.
The mortgage business, I use this expression a lot, the mortgage business is very pedestrian. And with the fact that it's very pedestrian comes a lot of erratic ebbs and flows. And if you don't have the ability to walk the walk and you haven't done thousands and thousands and thousands of loans, you're really not going to be able to compete in the market as an expert.
That's right.
So I consider myself, like I'm a lumberjack where I can chop down trees in the forest all day long, and I've been chopping down trees for 30 years. So no one can ever say to me, you don't understand or you cannot relate. And that's what gives us an advantage here at United, because we have lumberjacks in every department, people that not only understand the customer engagement process, not only do they understand how important it is to deliver and meet deadlines and create a positive experience, they've done thousands of loans themselves. And that gives us a tremendous amount of credibility, and the consumers can figure those things out very quickly in the beginning.
Just to wrap up, a couple quick things. So how many states is the company licensed in the United States?
We're licensed in 42 states, and we do about 32% of our business in 8 key states. And we have 19 branches that are located in different regions of the map. All of our branches can be found on Google. So if you're in a specific state and you want to look up United Mortgage, you would be able to reach one of our flagship branches and get a tremendous amount of support. We're on track to eclipsing 2.4 billion in volume for this year. So we're very proud of that. And we do everything as a cohesive group. We make business decisions as a committee. No one works in a vacuum, and every department is in place to support the overall customer experience. And those types of fundamentals are very, very sound.
Awesome. How can the crowd, Jasmine will put it up on the screen, how can they get in touch with you? Anybody has any questions, comments, need help with anything? How do they get in touch with you?
My email is very simple. It's jasonlevy@unitedmortgage.com. That's JASONLEVY @unitedmortgage.com. Feel free to reach out. Feel free to pick my brain. I'm more than happy to jump on a call. I'm more than happy to share other experiences. If you have any other seminars that need any guest speakers in the future, you could always lean on me. I would never say no to you.
Thank you. I appreciate that. And I will definitely take you up on that. We're going to get back on our roadshow in the fall physically. And of course, you guys can reach me at the velocityofmoney.com. So it's hello at the velocityofmoney.com. So Jason, I want to thank you today for sponsoring this event for us, for being an awesome business partner of ours. And I'm sure I'll see you soon. And guys, reach out to either one of us with any questions or comments.
Absolutely. Thanks, Frank. Thanks for being such a wonderful partner and a great dude. And I'll talk to you soon.
Okay, brother. See you
Take
soon.
care, buddy.
Okay.